Good morning and welcome to our monthly house view. The year kicked off with a strong push from the US administration to expand the US influence in the Western Hemisphere. We have seen rising geopolitical tension in Venezuela, Iran and Greenland. The consequence of that was a rise and a rally in silver and gold prices, a dollar weakness and also some resilience in equity markets with the emerging markets outperforming. But let's start with gold prices. As I just mentioned, gold prices have rallied over the past few weeks, but since last Friday, we have seen a market correction following the nomination of Kevin Walsh at the Fed. So Marie, what is our view on gold price? Have we changed our view following this market correction?
So yes, we've seen there is a gold correction in the past days, but we continue to be strongly overweight gold. We continue to see a structural positive trend for gold prices. For us, the main drivers of demand are still here. First of all, the financial demand, and second one, the central bank demand. So if we look at the financial demand, we know it's still high when we have real interest rates that stay low or that don't move. This is the case today and it's going to continue because it removes the opportunity cost to have gold because it's a non-yielding asset. This is also a way for emerging central banks to answer their fear of dollar debasement.
You just mentioned dollar debasement. Since the start of the year, the dollar index is down 1.5%, and there is still a strong narrative that the de-dollarization will be a subject over the coming years. But on the other side, there is also strong macro fundamentals in the US with a very strong US economy, resilient labor market, and we know as well that following the nomination of Kevin Walsh at the Fed, there are less fear that the Fed could be less independent. So what is our view on the US dollar?
Yes, so as you said, growth, the new nomination are positive for the dollar, but despite that, we are still negative on the dollar. We are strongly underweight. For us, there are two economic elements, the usual one, let's say, that are still negative for the dollar. It's a rate differential. It's less and less positive for the dollar. And also we have increasing public debt, increasing deficit. On top of that, we have the Trump's administration that is changing the dynamic of the dollar. Usually when there is geopolitical tension, dollar tends to rise. It's not the case anymore. We have political threats, economical stress from the US, potentially against their allies. So that's why everyone wants to get away from the dollar and diversify.
Last year, the dollar was down more than 10%. It was also a support for equity market, particularly in the US. You talked about the scenario. In our investment process, we try to ignore the noises, all the political noises, and try to focus on the four pillars that we have: central banks, fiscal policy, market analysis, and financial analysis. And according to those four pillars, we are positive on equity markets. Can you tell us a bit more on our positioning, Marie?
Yes, so we are positive on equities. We have this Goldilocks environment where we are expecting growth to stay resilient in the US. We are expecting a recovery in Europe, and we have inflation that is going to stay moderate. So we have a monetary expansion that will continue. In this environment, we are confident on valuation. And we are also very confident on earning growth that is expected to be high this year, higher than the historical average. So it's going to be a main driver for equities performance this year. And we are also overweight emerging equities because they benefit from a weaker dollar.
As you'll have understood, at Mirabaud, we ignore the noise and we focus on the fundamentals. Fundamentals are solid in the US and also in Europe. In terms of asset allocation, we are equally weighted on equities with a preference for emerging markets. We try also to diversify in terms of sectors. Despite the current market correction, we remain positive on gold. On our fixed allocation, we are still underweight US dollar. Thank you very much for tuning in.
And see you next month.